Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Wednesday, September 8th, 2010. Well, folks, the markets are hovering fractionally higher on the day after being up a little bit more, but we have come off those highs. As you can see on the chart in front of you when you're looking at the SPY intraday 10-minute, this is the 10-minute chart, and you can see from today we had a minor gap up, a push higher for the first hour, hour and a half, sideways motion. We did fill this little bit of a gap up here. Notice the gap going back to last Friday's close. That gap was filled. As soon as it was filled, the market started to retreat ahead of the beige book. The beige book was set to come out at 2 p.m. Eastern time, and we got it right here, and the market basically has done nothing from that point. We've downticked maybe ever so slightly. The SPY is up 57 cents right now, and again, you're just hovering right around the beige book time frame where the market was. And again, you can see how it was very interesting because the market sold off prior to that beige book, basically factoring in what the Federal Reserve was most likely going to say, and exactly what they said was this: slower growth spreads to more regions. You do have growth, but it is definitely slower. So nothing great, nothing negative. Markets overall coming slightly into that report, and again, holding steady. You can see essentially we're trading exactly where that beige book was released, right here at 2 p.m. Eastern time. Now at 3 o'clock, I believe we have consumer credit. That actually could be something of interest to watch, so keep an eye on that at 3 p.m. Eastern time. Now again, the market, technically speaking, today went up to a key level of support and resistance. As you can see, we gapped up, made a move up right into this little area. You did pull back off of that. We were able to scalp it, or some of the chat room members were able to scalp it on an intraday basis. Then once they scalped that for a profit, the market continued higher and moved up, kind of stalling out right in this area. You can see where the choppiness of last Friday was, and then just towards the previous hour to the beige book, where right around 1 p.m. Eastern time, the market did pop up, gap fill right here, folks. See this gap right here? That was filled right at that point, and the markets from that point on sold off. And again, the sell-off occurred prior to the beige book, anticipating that the Federal Reserve would say things were pretty weak, and that's exactly what they said. So for the most part, it's been factored in now, and the markets are now hovering right around the flat line, just a little bit on the positive side today. The Dow is up about 31 points on the day. NASDAQ is up 16, S&P's up 6, basically a 0.5%. So it's not a bad day. After about a 1% drop yesterday, the markets have rebounded slightly, basically negating half of that drop from yesterday. All right, now what else are we talking about here? What else are we looking at? Obviously, these double green trend lines up here are very, very significant. All right, so keep an eye on that. Very important to monitor that overall, folks, as we continue to watch this little pivot area up here. If the market ever breaks through that 111 area, you do expect a move to 112 on the SPY. Ultimately, it could take us all the way up to 113. If we flip to the 60-minute, you can see it a little better here. Take a look at this, folks. Here's your double top area. This is what we tagged and gap filled right here today. This area right here comes all the way from this gap window. Just draw that line straight across and check that out. Beautiful little bit of a gap window. That's what the market's having so much trouble getting over at 111, and will continue to be major, and I repeat, major resistance in the coming days. If you can take that out, your first move should take us upwards of this line. There's a little bit of a minor level right here on the way that should be a little bit of resistance too, but ultimately the 112 area, and then back to the 113 area, which is a key gap fill, and that's only if we get above the 111 breakout level and consider a breakout has been in play. All right, so that's what the 60 minutes showing us. Again, beautiful to see this head and shoulder play be negated, and we analyzed it and said that was a likely outcome. Why? Because it was at the low end of the chart. Head and shoulders at the low end, even though it's a bearish pattern, usually fail, and sure enough, you can see the upward move. Now you're just consolidating and chopping sideways, and that could be, again, in spirit of bull flag type atmosphere, and we'll continue to watch that. If we flip to the daily chart quickly, folks, this is the big thing that you're watching right now. If you connect your high pivot back from April 26th, see this date right here, April 26th, folks. If you connect that all the way down to this pivot high, which, by the way, was our turn date to the downside, we nailed that downside beautifully. And if you connect it to this point at the 9th of August, it goes right to current levels, and that's a big, big level on a daily basis. That is a huge level on a daily basis. If you take that out, you easily go to 112, 113, just like I said before. All right, let's go back to an intraday chart. I want to push up a couple charts, show you guys what stocks are in play today. Apple Computer is having a fantastic move today. Huge move. Take a look today, up $5 for a market that's barely positive, just up 30 points on the Dow and about 15 on the NASDAQ. This is a great move on Apple and probably helping the NASDAQ stay positive. So again, Apple, very, very nice move. Now, Apple has key resistance. Where's your resistance on Apple going to be? It's going to be right here. You got close today. You didn't quite get there. This is at around 265. You got to 264.39, and this is the high of the day. You could consider that an in-spirit of hit of resistance, and you have pulled back about $2 off of that high. But nonetheless, there's resistance there. If you get through there, you're going to probably move up a little bit higher. There'll be more resistance at about 267 as well. Other stocks in play, let's take a quick look here so we get you guys fully versed in what is moving on this market. And first off, let's take a look at Google. Google's having a decent day. Google again, really a weaker chart though. If you compare this to Apple's chart, major differences overall. One thing I have to say is you're still looking at a daily chart that has an in-spirit of bear flag right up into resistance. Now the bear flag, in my opinion, could be negated if you close above the 50 moving average. You see the 20 there, the 50 moving average above that at approximately 474. If you get to 475 or so and close up there on a daily basis, that could negate the pattern and you could see further upside in Google. But right now that bear flag is still in play. Now, financials are the last thing I want to touch on here. Financials, unbelievable of late. Really, ever since a week ago, they've led this market, and it's a key component of the market. You guys that understand the methodology of in the money stocks, and again, the great calls from the research center or the chat room, you guys know that the financials are key to this market. You have to look at Goldman Sachs. You have to look at JP Morgan. They'll dictate every which way of this market. And sure enough, you can see a surge to the upside here over the last week. What do we know about the market? The market's had a huge rally over the last week. Basically 6% higher. So financials leading the charge here. Goldman, ugly chart on Goldman Sachs. You can see even going back to here in April, look at the drop it had. Kind of chopping around here now, starting to get a move up. It'll have resistance right up here at gap window. There'll be some resistance. And then ultimately gap fill and the 200 moving average will be major spot right around 155 if we ever got there. That would be a huge resistance level. Double top as well right there. All right, so key on Goldman Sachs. JP Morgan also. Take a look at the move in JP Morgan over the last few days. If you go back to last Wednesday, Tuesday area, look at this move up from basically $35.50 all the way up to a high of almost $39.50. That is an over 10% move at this stage of the game and a monster move on JP Morgan in 1 week. So again, big surge. JP Morgan up 90 cents on the day. Notice where it's coming into. Look at gap fill. Beautiful resistance really being retested here. If it closes above there, it could make its way up to the 200 moving average. That is a possibility. So keep an eye on this level. Right now, you're into major resistance on JP Morgan. If it gets above and closes above, it could be on its way higher as well. All right, so keep a close eye on that. But financials really are key here, folks. Obviously, ExxonMobil and Chevron are key, but for the most part, financials are going to be the leaders. Look at your 4 leading stocks, Goldman Sachs, JP Morgan, Chevron, and Exxon for a good leading indicator on how this market will perform. Dollar today, dollar is getting hit a little bit, down about 11 cents on the day. That's after a monster move yesterday into the 50. Notice how you can't get above that 50. That continues to hold true. I'll discuss that in the nightly video tonight in depth in the Research Center. Again, folks, those of you that want some key analysis, unbelievable swing trades, and entry points on stocks and the market and ETFs, oil, the dollar, you name it. It's all in the Research Center, $49.99 a month. The money that's made out of that Research Center is insane. Come join the Research Center, $49.99 a month, folks. I'll talk to you soon. Take care.